Welcome back to our Top Producer Mindset podcast. My name is Serafin, and I am the Director of Operations here at Equity Smart Home Loans. And I am joined with Pablo, who is our CEO and broker at Equity Smart. Say hi to everyone, Pablo.
Hi, Serafin. How are you? I must say you look really well dressed. So
Thank
thank you
you.
for
Thank you.
showing up.
Yeah, something about being on a podcast today.
Right.
But today's topic actually is something that happened just recently. We're going to talk a little bit about the recent rate drop. We wanted to just kind of keep it a little bit more public friendly in terms of giving some of our audience some of the information as to what's happening currently in our industry, right? So if you wouldn't maybe just like share some of that information as to like what just happened in September, I think that would be a good starting point.
Yeah. So we had a rate drop, and to me, it wasn't a surprise, to be honest. And I think for a lot of folks, especially in the politicians and all that, because rate drops are usually expected around election time, and we've been dealing with high interest rates for a while now, and inflation seemed to be in check. So I think what did catch us by surprise is that it was a half a point increase, and I think at most we were expecting a quarter, right? At least I was.
Yeah, definitely.
And so that's great news for all of us that are trying to borrow money at this time right now. Good for home buyers that are trying to buy homes, and also great for people that want to refinance that bought in the last 2 years because they can lower their rate. And just a point drop can
Right.
save a bar hundreds of dollars. So it's exciting for everyone, I think, for us too, and we're geared up to start helping people with the refinances as the rates continue to drop.
Got it. So I just want to kind of like pierce through the jargon because a lot of times in our industry we start using things like bips, quarter point, rate, drops, all that kind of stuff. What does it really mean when we're saying that the Fed lowered the interest rate by half a point? What does that mean for a consumer? Not like someone in our industry, but just like regular, Jane and John Doe.
It just means simply that they're gonna get lower interest rates.
Got it. Got it.
Or
Got
do
it.
you want
So
me to put it simple?
yeah, put it simple. Put it
Yeah.
simple.
So
So
they're just gonna they'll start seeing lower interest rates, not just on mortgages, credit cards, auto loans. If you have a line of credit, you're gonna see an adjustment. I've already started getting letters, and and on the other side, if you have a savings account, they're gonna lower that too. So that's not a good one, right?
right.
You wanna earn more yield. But overall, it's good for borrowing. Rates are going to come down across the board from credit cards all the way to mortgages and all types of loans in between. So that means that you can borrow a lot cheaper. And the intention there is so that people are out there doing more purchasing activities because things rates are cheaper now.
Got it.
And that's how the government, we all know, stimulates the economy, right? It gets people excited to go out and buy. They know that it's cheap or cheaper to take on the credit.
Right, right, and, because, right, the Fed basically stimulates the economy by making it cheaper to borrow, right, that should have a more or less, like, downstream effect on the way people spend, right?
Yeah, and if you think about it from an individual perspective, you start thinking, well, what does it matter? Like, I'm saving, 20, $30 on our credit card or whatever, right? But you got to think the magnitude, right? There's millions and millions of people in the United States. So if everyone's saving $20, $100, and it's just more money being injected into the economy. So you got to think of it that way. If you
Right,
think of it from an individual point of view, you yourself might not feel like you're making a big impact,
right.
but just the magnitude of about all the bars that there are in the United States, they're going to start to begin to borrow, and we're seeing that, right? We saw our application refis go up, especially after the
Significantly.
yeah. And the other thing, that the exciting thing that happens is it triggers conversations. If more than anything, it's people watch the news briefly, or they just hear an announcement, or maybe a coworker talking about it,
Yeah.
and they're like, okay, let me check with my mortgage broker, and they might not even have all the facts. They're like, yeah, I heard rates drop, right?
Yeah.
And then it's a good opportunity for us to engage and help them, and let them know what options are, and it also puts them in our radar, letting us know that they may be potentially looking to borrow. And I know there's a lot of pent up demand because a lot of people haven't been able to buy, and they haven't been wanting to borrow to do upgrades and remodels and things of that nature, right? So I'm hoping that starts stimulating everything. And what does that translate to? Right now, there's jobs for contractors, people that are selling anything that has to do with home products, or kitchens and all that. So think about just all the movement that starts to take place when people start borrowing and doing things and upgrades, and so you could just imagine.
Yeah, so a lot of possibilities there, which I think a lot of people have a more general idea about, right? Lower rates should mean that I save more money if I borrow more, right? So, like you already mentioned, auto loans, credit cards, all the lending instruments basically are going to be a little bit cheaper, right?
Mhm.
Um, but I think something that I was reading recently, and I kind of wanted to bring to the topic or to the forefront here of this conversation is just like how those interest rates have been interpreted, especially when they're supposed to be lowered, have been interpreted to also mean that the cost of certain services, such as like or even the cost of groceries, how those should be coming down too. But obviously that's something that, isn't necessarily tied to the rate, but the overall sentiment, right, of how people spend is really tied to what they pay money for, right? So
Mhm.
some of the more like gas, right? Although gas has been coming down, right? But gas, milk, eggs, some of those sort of items that people have noticed, and myself actually, when I go to the store, I'm all like, "Am I spending $6 for 12 eggs now?"
Is that what it is now?
I'm is
I
that
honestly haven't been into a market.
uh,
I couldn't tell you. I know things are
yeah.
are are probably a lot more than what I used to pay as a kid, or so I let my wife do all the shopping,
Oh, no.
but I do
Yeah.
see the accounts going,
Oh,
getting
got
hit
it.
harder every time
Got
she
it,
goes to
got
the
it, got it.
groceries. But overall, I mean, rates coming down is going to translate to many things, and commodities, I'm not sure what direct impact that's gonna have, but if companies can do things cheaper by borrowing and getting more equipment and being more efficient, then I can see how they can produce more and then provide us, the consumer, with lower costs. I can see
Right.
the connections there,
Yeah.
but
Yeah, because I mean, like, some people are in that category where they have everything ready, right? But I have read, and when I say everything, I mean like they have money saved up, credit looks nice, all that kind of stuff. But I would say like a lot of the people that are just interested in buying a home aren't necessarily like ready that second, right? And a lot of times some of their struggles are just like, hey, how do I save you know some money at the end of the month, right? So I find that those commodities, right, they make a big impact there, and the rates have an indirect way of obviously shaping the way companies spend money, right? Because companies have to borrow money too. However, it's not like the rates coming down is necessarily gonna translate into, "Oh, yeah, everything's gonna be cheaper now," right? So, that's, I think, important just to kinda disentangle those things, right? There is impact, but it's not direct, right? And, that's something just to note is that, rates coming down is a way to alleviate pressure on that sort of demand that you were speaking about, right?
yeah, yeah. And I don't, in having many conversations with borrowers, I don't think a lot of them even understand, when is a good time to borrow, and I think that has to do with a lot of lack of education that we get, in our younger years, about how to finance and moving. We had conversations earlier about people, the meeting that we had, that people are waiting on the sidelines for rates to come down, but they don't realize that with rates coming down, property values are going to go up. So what are you gonna tolerate more? A higher interest rate, lower home price? So you gotta think about all those things, right? For me, it's you're better off getting a good purchase price, because interest rates are not permanent. You could refinance down the road and lower your payment, and continuously lower your payment as interest rates go down. But that's something that a lot of people are not aware of. And I think someone jokingly said that someone's waiting to get a 1% interest rate before they buy. So I
Yeah,
mean, if
yeah.
interest rate gets to 1%, you can only imagine what's gonna happen to home prices, right?
Right, right.
But I think that's our role as a loan officer, is to bring that awareness and allow people to understand how your strategies in home buying should be. And I've always pondered that question. For me, it's a very simple answer, right? At the moment that you want to buy, at the property you're looking at to buy, can you afford the payment?
Mhm.
Yes or no?
Yeah.
That's simple. And if the answer is yes, regardless of the interest rate, move forward with the purchase. If you're fortunate and they're low, great. If they're high and, but you can still afford the payment, then buy anyways, because you're going to have an opportunity to refinance down the road. But the one thing you've locked in is the purchase price.
Yeah.
So again, for me, anyone asks me when is the best time to buy a property, I say when you can afford it. Because when you can afford it, that means you're going to be able to maintain the payments and continue to have that property.
Yeah, yeah. I think you bring up something that's really important, right? Which is like there's no silver bullet to this thing, right? Like every situation's different, right? So the rates coming down is obviously good because it changes affordability, right? But now it changes affordability for everyone, not just you, right? So if you couldn't buy that house, 6 months ago, and now you can, well, odds are someone's in the same position as you, thinking the same exact thing as you, and your way forward really is like what you said, like, can I afford it, right? Am I really clear about why I want to do this? And that's the thing, right? Sometimes I feel like our borrowers come up to us and they're looking for us to try and provide them like this magical guide as to like how they can make this happen. And we can help create the guide, but we can't do it for them, right? We need to be able to solution that together. And I think that's when getting into contact with one of your loan officers, hopefully one of our loan officers at Equity Smart, you get to have that sort of custom roadmap built for yourself because every borrower is different. Sometimes people want like the general sort of scenarios, and we can provide that. But the reality is, your scenario is going to be shaped by your life, right? It's going to be shaped by who's going to be on the loan, the amount you can afford every month, your employment, take home income, all that stuff, right? And even at the end of the day, you have to understand that if it's your first time buying a home, it's gonna be a lot of startup energy, right, to get to that point, and it's gonna be a new normal, right? So that's to say is like it benefits you to start figuring out who's on your team and who can help build this dream with you because it's kind of like a large undertaking and there's a lot of information out there, right? Where it's kind of like, okay, who do I go to? Who do I believe? But that's actually what we're passionate about here at our company, right? Is we love educating new people, especially borrowers who are just thinking about it. Because yeah, it's important. The largest purchase you're gonna have in your life, most likely, right? And one of the most impactful too. So yeah, for those that are just thinking about it, right? And just kind of curious, hey, like, hey, what does this mean for me? I would seriously do some research. Think about what you want. It's a great time of year, right? 2024 is coming to a close soon, and 2025 is coming, is going to be coming soon. So yeah, think about those things. I know I'm thinking about those things too myself. Having never been a homeowner, I'd love to buy a home.
Yeah, and
Yeah.
I'm happy to be your loan officer, and, I'll definitely be giving you that 20% discount we talked, but
Oh,
I gotta
okay.
still make my money.
Okay, got it. Yeah.
No, but, I'll share a story with you. So, I didn't buy a house right away to live in when I got into the business because, I had read a book by Robert Kiyosaki, Rich Dad Poor Dad, great book. You wanna read it? It's mindset, and the gist of the book is, you don't wanna rely on your direct income, your employment income to pay for things, right? So, you wanna make investments that are gonna pay for the things that you want, right? So, you want the fancy car, buy a rental property that's gonna produce the income that's gonna pay for that car so that you're not paying for it, right, with your hard-earned money. You have an asset paying for it. You want a house, get enough assets to help cover that mortgage, right? So that's kinda the gist of the book, and that's why I read it, right? So, that got me on the path of buying, units, right? So, a couple of the properties that I first bought were a 3-unit, 2-unit, and then I finally decided to buy a single family residence, one that I was gonna live in. This is in 2000, right? So a long time ago, back in the cave days. And
I love that.
this is when homes were 185,000, right? Because that's what I paid for the
Gosh.
house. And
What?
my mortgage, I took advantage of first time home buyer program and put in a loan down payment. And, this is where a price difference between 170 and 180 could actually put you in a whole different neighborhood, believe it or not.
Yeah,
The 20,
okay.
30 grand meant something, right?
Yeah.
And but anyhow, I bought this house, it was a fixer upper, and, I did the PITI, which is the full payment with property taxes and insurance, and it was $1,200, right? And I remember being
Where was
going
this? Where was this?
huh?
What city was this?
This was in West Covina. Yes.
That's wild.
Yeah,
Yeah.
so $1,200, right? So I went to escrow, signed the paperwork. I'm like shaking, right? Like, oh my God, I'm about to marry this mortgage, $1,200. And back then, $1,200, was quite a bit of money, believe it or not. I know it
Yeah.
doesn't sound like much right now.
Yeah.
So I'm signing away. I'm nervous. I'm like, oh my God, how am I gonna make this payment? And like I better, keep hustling. I gotta make this payment. Now I'm committing to this. And I understand that experience of a first-time home buyer because it's a huge commitment. It's 30 years, and it says that
Mhm.
on there. This is for 30 years,
Yeah.
right? The other scariest thing that I can compare that to is when you get married, right? 'Cause
Yeah.
almost the same feeling. Am I sure I wanna do this?
And a mortgage actually, I mean, sidebar, right? But mortgage can probably last longer than your marriage.
Yeah, and the great
Oh my
news is
god.
that, you buy it,
Yeah.
a year goes by, you get used to the payment, another year goes by. After 5 years, 1,200 seem nominal, like, you can even rent, I started to realize you can even rent a one-bedroom. Nowadays, you can't even rent a studio for $1,200, in a good area, and I'm over here sweating a $1,200 payment, but this is why I'm a big proponent of purchasing your home as soon as you can, when you
Yeah,
can,
yeah.
and when you can afford it, because you're gonna allow time to do its thing,
Mhm, mhm.
regardless of whether interest rates are up or down or all around. Doesn't matter. You just gotta make sure you can afford the payment because you're gonna get used to it. Over time, you're gonna gain the equity. That property eventually sold it for almost 600,000. And I remember the neighbor came out the day, and I got the keys. Rainy day, no one waiting for me. There was no balloons. There was no like celebration. It was
Yeah.
a very anticlimactic experience, not the ones you see on TV when you first buy your house and,
Yeah, yeah.
you have the band playing the music and everyone's so happy for you, right?
Right.
And all I remember the next day, my neighbor coming out and he goes, "You overpaid for this house," right? And it just made me feel even worse, right? I'm like, and then we're laughing about it now, but
Yeah.
how can you overpay for a house that's 185,000?
Yeah, that's how
And
much the box near down my street costs now.
yeah,
It's
you can
like
even build the house
square.
for that much.
Yeah.
And so long story short, it worked out. I got through the fears, and, I share that story so that maybe it could someone out there that's listening to this can understand, the power of purchasing. And, I've made a lot of money, arranging loans for people, but I really generated a lot of wealth through learning how to invest in real estate.
Yeah, yeah.
And that's something, I like to share with people. And I've dealt with all kinds of markets up and down and all around. And there's always going to be an excuse why not to move forward, right? Why you shouldn't move forward. And if you focus on your goals and the things that you want to accomplish, then you're just going to get them done, regardless of what's happening in the market, because the market's going to be fluid. It's going to keep moving, and you're never going to be able to time it right or
Right.
untime it, right?
Right.
So,
Yeah, yeah.
so don't bother with that. Just, can I afford the payment now? Can I get into something that I'm not going to get myself in trouble with?
So, I think really important thing that you said there is there's no real way to time it, right? I think a lot of people are trying like, how do I time it? I know anyone there that's traded any sort of Robinhood like accounts is know exactly what I'm talking about. During 2020, 2021, you're like, let me buy GameStop, let me buy AMC, and everyone wanted to get on that train because if it's so it just feels so good, right? It feels so good to know that you somehow had like this magical, crystal ball and you can see where things are going and you just got it all right. But the reality is a harsh lesson sometimes when you don't pay attention to the fact that the market is often unpredictable and we are dealing with limited information a lot of the time. So, one of the things that I just wanted to highlight because it seems really counterintuitive to a lot of people that are not in our industry, and that's the fact that when the Fed actually announced that rates were coming down, right? Pricing actually overall worsened on the rates, right?
Hmm.
And some people were like, "Hey, why'd that happen? Like, that makes no sense." And they're kinda just thinking like, "Hey, why is gravity not working? It's supposed to go down and it's going up, right?" So, I'm just wondering if you can just explain a little bit more about that so that way, some of the just like, everyday, consumers can like understand like why that phenomenon happens.
Yeah, you got to understand the Fed rate is what the rates that the banks let each other borrow. So I don't want to bore you with all the details. Just understand that the lenders already started adjusting for the rate drops. So when they happened, it actually made a big push for the rates to go a little bit higher, and it's temporary. I've seen this time and time again, and over time they are going to continue to drop. It's just the reaction to the rate drop that occurs causes the rates to temporarily go up,
Mhm, mhm.
and it all has to do with what's happening in the secondary market. And again, I don't want to bore the normal person with this, but
Yeah.
but
Yeah, we're
under
sick people, we actually like this
yeah,
stuff.
but I know, but understand that overall the rates will go down. But you have that little jump. Maybe wait a month or two, but you'll see that the rates actually continue down. There's things that are immediately impacted, like car loans and stuff and credit cards. You're gonna see they implement the drop right away. So
Yeah.
mortgage is a little more tricky because there's a lot, you have the big GMCs, the GMAs, I'm sorry, the Fannie Mae and Freddie Mac and
GSEs.
GS when I see GMCs, I'm
Yeah.
thinking of
Yeah.
cars.
Oh my god. Yeah.
And so they're involved, and they play a big role on, buying back mortgage-backed securities and all that. So,
Yeah, yeah, yeah. I'm
but
already bored. Stop it.
I know that's why I didn't want to go down
No, no,
again.
no, I'm just joking.
If you can afford to buy, buy.
Yeah.
I'm always gonna go back to that.
Yeah, yeah, and I just what I wanna highlight is that it seems counterintuitive, right? Rates go down, or, the Fed rate goes down or target rate, but then rates go up for lenders. That's because some advice that read that has held true to this day is that the market doesn't care about today as much as it cares about what happens 6 months from now. So oftentimes what's happening is that the market is anticipating what's going to happen 6 months from now as opposed to what's going to happen tomorrow. Right? So you and I are thinking, "Oh yeah, rates came down. That's cool, right? That's great. Like everything else would come down." But companies aren't thinking this way. They're thinking about where do we think the market's going to be 6 months from now? And what happened is that a lot of lenders actually were pricing in a more aggressive rate cut before the rate cut. So, like Pablo and I mentioned already, we're like, "Oh, wow, half a point, 50 bips, that's, half a percent, right? That's a lot. That's a lot."
Mhm.
But lenders were actually even more aggressive, and they were pricing in 0.75% rate drop. And so the fact that that obviously did not happen meant that rates were lower than uh, right before the rate drop announcement. So the week leading up to the rate drop announcement, rates were as low as I've ever seen them. And then the days that followed, rates started going higher again because, well, it wasn't 75 basis points. It wasn't 0.75% of a drop, right? So now those rates are going to get to the new normal and they'll stay there. And then, yeah, it's going to cause that sort of phenomenon. So I just wanted to explain that because it's not obvious to most people who are just looking from the outside in. And I get it. We're all busy, and it's like I don't even have time to figure out all this stuff, right? Who can I go to? That's why you would come to a company like us and ask for that information and try and figure out that the market. But point being, and I just want to like hit this point home because it's really important. If you can afford it, and if you know that it's something that you want to do, go for it. Like and that go for it obviously isn't like it happens overnight. It's a process, right? It's a journey. So you have to just commit to that journey and start the conversation now, because just because you feel like you're ready now doesn't mean you're going to be ready over, next week or even next month, right? There might be work to do. But the point being is, get involved. Get involved in that sort of in the market, and building that financial literacy is huge. So that way, when it comes down to you interested buying a home or trying to figure out how to tap into your equity, you already have someone on your team. And obviously we hope it's someone from our company. But even if not, do yourself a favor and find and build that team out. Find a realtor if you're trying to purchase. Find a loan officer that understands your position and you trust, right? Because it's really important that, especially that first purchase, you find someone who's really on your team and on your side, can educate you. Yeah. So we talked a lot about purchasing, right? Now there's another group of people out there that I know that our loan officers have been encountering, right? And I think maybe if anyone listening here can relate to this, it's like the people who refinanced in the 2020s, right? 2021, when they're like, "Oh, I know a good deal when I see it," and they got something super low and like in the low twos, right? And now their starter home is their forever home, is what they're calling it, because they don't want to
Yeah,
touch
and
the rate.
I'm one of those guys that I actually bought a couple of properties, and I got my beach house at 2 and a quarter, and then I got my main residence under
Not
2%. So I'm
relatable.
sitting
Just kidding.
I can totally relate, like, we're not even bragging about the homes anymore. Like, forget that I bought a beach house. I got I got a 2 and a quarter. That's a more of a
I'm
hot
sputtering
topic.
over myself. I'm like, "Hey, can I get 1 home?" Like, "Oh, yeah, the 15 homes I have."
But to me, honestly, just unbelievable how cheap the rates got. I mean,
Yeah.
2 and a quarter. Come on. I mean, it was. I mean, we were so busy refinancing people, and it only made sense. I remember. some bars saving up to $600 a month, you know?
Yeah.
And you can see why things started to get expensive. It's clear because if you have, and I'm making this number up, right? But let's say you have on average, uh, average family saving $300 extra a month, and you multiply that times a million people across the country, then there's a lot of money being injected into
Mhm.
the economy,
Right, right, right,
because now people have a lot of extra disposable income.
right.
So what's gonna happen to commodities and prices,
Yeah,
right? They're
yeah, yeah.
gonna go up.
Right, right.
So everything that happened completely makes sense,
Yeah,
right?
yeah, yeah,
And now you have a tightening of the interest rates. The whole topic here is the Fed rate, going up and
yeah,
down. And now, we're going to see a tightening of the money. So it should cause prices to go down because people are going to think twice about splurging, taking vacations, and making money, right?
yeah.
So that's the whole thinking
Definitely,
behind it, right?
definitely.
But it's interesting times that we live in too because there's, so many different, economic centers now. I mean, we have all kinds of industries in play. We have all the stuff that's happening online.
Definitely,
We
yeah.
we have all this stuff that's happening around the world that all of this, yeah, that
Affects the rates, definitely,
exactly.
yeah,
So
yeah. One of the things I wanted to just kinda, like, highlight here as, like, a little bit of a straw man slash, kind of scenario that has happened, right, in the past is that so when rates were coming down to, like, all-time lows, we had some borrowers who were still like, "It can go lower," right? And they're like,
I haven't reached the bottom.
"Reach the bottom yet. I'm gonna time this
Well, that's what we're
perfectly."
talking about.
Exactly.
Everyone trying to time everything, right?
And you know what? They're still waiting, you know, because guess what? They missed it. They missed it because they didn't pay attention to that cardinal rule that we mentioned. They could afford it, but they wanna lock in the best deal possible, and so they waited and waited, and they got busy, and then before you knew it, the rates were gone, and they checked in with us, and they're like, "Hey, are we in the ones now?" And they're like, actually, sir, it's, 5.75 now." And or like 5.875, and they're like, "Oh, why it's not going down?" And I'm like, "No, that's never happening again, actually." Like, historically, I want everyone to know, 'cause it can't be understated. What happened is, like, unprecedented. It's never got that low. So the fact that it happened is kind of like it's like, "Whoa," right? So I we do have people that ask us from time to time, "Hey, are we ever getting back there?" I would love it if that happened. I don't wanna shoot myself in the foot and say it will never happen, but it's unlikely, right? That being said, it doesn't mean that, it's like all of a sudden you can't buy a home, right? What it means is that the market shifted, and again, like we mentioned, the problems will when you enter the market, especially when you're buying a home, will just change, right? If everything's super affordable, then everyone's gonna be, pumping up demand and supply is gonna be affected, right? So and that's what happened, I think actually. A lot of people who are listening to this who, were trying to buy a home in 2020, 2021 can empathize with the fact that they were competing against like 50 people on some of these on some of their offers, right? Like these bidding wars were insane. So I digress though. My point being is that there's no timing it. Pay attention to affordability, right? If you can afford it, great. And right now, it's really becoming a great time to get involved. I mean, just kind of one of our last questions because I know we're starting to run on time. Where do you think the market's going to go? I mean, we had one rate cut. Do we think we're going to get another?
I think I'm very optimistic. I feel like we're gonna be, bar from anything major happening. I think we're gonna be in a healthy market where, if the Fed does this right, everyone's calling this a soft landing, and that's a term we can argue its meaning, but
Yeah.
for some people, I know it's been rough. That's why I say that.
It didn't feel
but
soft.
but
Yeah.
but the soft landing meaning, that it didn't really, shake up the market that much,
Like we didn't have
and
2008 happen all
yeah,
over again,
exactly.
right?
Like
Yeah.
we didn't fall into a deep depression, recession. And so I'm hoping what happened in 2011, 12 after the market crash starts occurring where, there was a lot of business, but it wasn't overwhelming and it wasn't a lot, and people were slowly coming back into the market. And it was great because it gave us a lot of time to really service the customers and pay attention and be there for them, right? And so I see that happening now where people are still going to be moving forward to refinance and do things, but it's going to be at a slower pace. And as the rates come down, we're going to see, more people injected into the market of refinancing and doing borrowing activities, especially in the mortgage side. And it's going to be done hopefully in a healthy way where it's not a sudden drop and then you have this giant herd of people wanting to do the same thing at the same time.
Right.
And I think spreading it out the way I see it happening is gonna be healthy for not just us in our industry, but the whole economy as a whole.
Yeah. No, definitely. No, thank you for mentioning that. Thank you everyone who tuned in today's podcast. We really enjoyed talking about what is just going on. Obviously, it's very exciting times. And like I mentioned, if you are just considering purchasing a home or refinancing, or you just don't know where to start, I encourage you, look us up. You can find us at equitysmartloans.com. And of course, you can also look us up. We're just, well, I don't know if you're listening to this, but we're in California. And we would love to, yeah, be able to help anyone that is interested in, of course, starting the home buying process. But I think that's all the time we have today. Want to say thank you again, and we will see you on our next podcast.